You're watching Business Incorporated live from Channels HQ. Coming up, Nigerian Exchange Group begins first physical trading since the COVID-19 pandemic. And we're going to be drilling down and crossing over later on the show. First off, let's take a look at what's happening in the Middle East. In the Middle Eastern markets, we see it's all positive. The Abu Dhabi index there up 0.84%. And we see that other markets we track in the Middle East are not looking so bad right now. There's Qatar and Saudi in the green. Let's move on to Europe now. We see Eurozone finance ministers are gathering in Brussels to discuss the bloc's worsening economic outlook, including record inflation driven by soaring energy prices. Let's get more now from Chris Koba right there in Berlin. Great to have you, Chris. So what exactly are leaders going to talk about today?
Finance ministers are going to look at the measures taken in the 19 member states to tackle high prices. Now, according to European Commission data, energy prices are up more than 40% compared with last year. This steep increase is largely to blame for Eurozone inflation hitting 10.7% last month, which is a new all-time high. And European Central Bank President Christine Lagarde recently said that the likelihood of a recession in the Eurozone in the coming months has increased. So it is a whole pile of issues that need addressing here. Many countries have brought large aid packages underway to support businesses and households whose bills, mainly for energy, have been skyrocketing. Countries like Spain and France have introduced price caps for gas, for example. And the ambition of all governments has been to have financial aid tailor-made, at least when it comes to households, as to direct more support to low-income families, with overall price increases hitting them harder as they have to spend a larger portion of their income on day-to-day products and services compared with better-off households. But having the support geared towards the intended parts of the public has been difficult, and many governments have chosen to help quickly rather than going into deeper data analysis, which would have delayed support measures. That's why in Austria, for example, a price cap for gas and energy is the same for single households and for larger families, forcing some to save energy to stay within the price cap, while it's more than enough for others.
Needing all the support right now. And a wave of criticism has been hitting the German government for what some call an uncoordinated announcement of massive aid package. What could distort European markets now? How is that going to impact today's discussions?
It's likely to have a big impact. Criticism of the German 200 billion euro support package has been loud, and there really is a fear among smaller, financially less potent countries that Germany is supporting its own economy to the detriment of other companies in Europe. That's why finance ministers will discuss how member state governments could better coordinate measures in the future and how to do that without supporting inflationary trends. Now, in trying to give citizens a financial break over the summer, the German government, for example, temporarily waived state taxes on fuel and subsidized tickets for public transport. Now, when these measures ended, prices jumped up again, contributing to already red-hot inflation. So, as usual, one might say, a more coordinated approach is what's on the agenda, along with the economically difficult task to financially support citizens without further fueling inflation.
All right, first trading day of the week. How are the markets kicking off?
With some profit taking. Most European stocks are retreating this morning after strong pre-weekend gains. Germany's blue chips index DAX is losing around 0.5% in the first hours of trading. And along with raking in some profits, there are potentially market shifting events that investors are eyeing this week. There are, of course, the midterm elections in the US tomorrow, along with fresh inflation data coming from the world's largest economy. In China, health officials reiterated their commitment to strict COVID-19 curbs over the weekend, disappointing investors hopeful for a relief. Separately, data showed Chinese exports and imports both contracted in October and missed forecasts.
All right, thank you so much. That was Chris Colbert there, giving us the details right there from Europe. Thank you so much. Let's move on to the UK now. We have Juliana standing by right there. Great to have you, Juliana. So we got the UK house prices that show the steepest fall since February 2021, but CEO pays are still soaring.
Good afternoon, Laddie. Yes, of course. If you're a top CEO of a bank, you would have a decent salary. But let's focus on the UK house price story, which is really significant because, of course, we know over the past couple of years, the housing sector has been soaring and soaring. So if you look back for the past 12 months, house prices have risen £20,000. If you look back the past 3 years, they've risen by £60,000. And at the moment, the average price of a UK property is £292,000, Laddie. I've done some calculation, and according to my calculator, that's 283 million naira. This is outside of London, by the way. If you want to live in London, you're going to have to pay about 550 million naira. That is just how expensive it is to live in London. I just wanted to provide a little bit of a reality check there. It is very, very pricey to live here, and we have been seeing prices rising, and the market have been watching and waiting, because they knew that the house price bubble was going to burst at one point, and it does appear as if we are starting to see the beginning of that. As you said, Halifax index have reported that house prices have fallen by 0.4%, but that's not a contraction. There is still some growth. I think month on month, house prices rose about £8,000, but it's slowing down. It's not as fast as it previously was, and there are so many issues as to why this is happening. I think the first and the most obvious one is, of course, the mini budget and what that did to mortgage rates. We see that even those who are on a standard mortgage rate, not a variable, their mortgage rates are increasing. This is putting off a lot of first-time buyers. Also, as well, because of Liz Truss's budget, some mortgage products were literally just pulled from banks overnight. So these mortgages are just not available for first-time buyers at the moment. And then, of course, the cost of living crisis. It is very, very difficult to try and put up, your deposit. If you want to live, let's say, for example, in London, average house price £500,000, you're going to have to put up about £50,000. It's not easy to just pull that out of your left pocket, Laddie. So lots of issues going on, but really interesting to see how this housing market activity is going to go forward as we enter into a recession.
Well, Juliana, I guess there goes my UK house purchase with those prices.
You can rent,
I
Laddie,
could rent,
that's
right?
fine.
Oh, okay, I'll
you
look
can
to
afford
that.
to buy anyway.
All right, we see eBay there. They're advising, customers to pick old over new items this Black Friday. What's that about?
Yeah, this is really interesting. Black Friday, 25th of November, traditionally, but I suppose, most consumers know that it's turned into a kind of month-long bonanza. You can't walk down a high street without seeing the signs of a Black Friday sale. And eBay is trying to go back to its roots. That's what its chief executive officer in the UK is saying, that, we've got to be conscious about the cost of living crisis and the fact that people just don't have enough money in their bank back pockets to constantly be buying new things. And when eBay, just to remind people, is like an online marketplace. When it was originally launched decades ago, at least 20 years ago, goodness, it's been quite a while, it was so people could resell used items. And now they're saying they really want to focus on that, just being conscious of the fact that, we are going through a cost of living crisis. People don't have as much money before because bills are going higher, but also it is much more sustainable. If you're looking for a decent item, rather than trying to buy something new, you can try something that has been recycled. So it's going to be interesting to see how Black Friday is going to be for retailers in the UK. We know this is a really important period for retailers here. According to some retail watchers and observers, they're thinking that Black Friday will be 15% less in terms of output than it was last year. So we'll just have to wait and see. Those famous phrase I love to say at least once a day on your show, Laddie. But eBay are taking the charge in trying to tell people to think before they spend.
Yeah, our daily dose of wait and see. we got that today. All right, how are the markets looking, though?
The markets are doing pretty good at intraday. The FTSE All-Share, the blue chip index, is in positive territory. I think this has been helped because we had data from Ryanair, a trading update from Ryanair, which is Europe's biggest budget airline. They are back in profit, and that's really lifted up all the travel and leisure related stocks. So the FTSE, as I was saying, is up by 0.16%. The FTSE 100, that's up by 0.02%, and the FTSE 250 is up by 1.09%. In the currencies market, one British pound will buy you $1.14, and it will buy you €1.14 at intraday. The pound is rallying against both currencies at intraday, Laddie.
Right, Juliana, thank you so much. We'll get more details, see what happens tomorrow in those markets. Thank you so much.
Thank you.
That was Juliana there giving us the details from the UK. Let's head on to Asia now. Let's see what's happening there. We see Hong Kong stocks led gains in the Asia Pacific today as China's trade data fell far short of expectations, marking the first annual decline in exports since May 2020. Exports fell by 0.3%. And imports also fell by 0.7%. And that's a poll forecasting a rise of 4.3% and 0.1% respectively. The Hang Seng Index in Hong Kong gained 2.55% in the final hour of trade, and the Hang Seng Tech Index gained 3.88%. Mainland China's Shanghai Composite was fractionally higher, while the Shenzhen Component gained 0.23%. The Nikkei 225 in Japan closed 1.21% higher. It's closed at 27,524 points, while the Topix also gained about 0.98% to close at 1,934 points. In South Korea, the Kospi was up 0.99% to close at 2,371 points, while the S&P ASX 200 rose 0.6% higher in Australia to close at 6,933 points. All right, we'll take a break now. When we come back, we cross over live to the NGX trading floor. That's in a moment. Just stay with us. Welcome back. And today, for the first time since the start of the pandemic, the physical trading is back at the NGX trading floor. And we have our very own Will Ibong right there, live on the floor. Will, great to see you on that side. And I'm sure with you there, this market is going to close in the green today.
Definitely, Laddie. It's good to be here, Laddie. It's amazing to be on the floor of the exchange for the first physical trading since the COVID-19 pandemic. You can imagine it's been over 2 years now that the stockbrokers have been trading remotely from their homes or from wherever location that they are, other than the NGX. And we've been churning out the numbers that we've been seeing. It's amazing to see that. But right now, it's buzzing at the NGX, and it's also the commemoration of the 30th anniversary of the Chartered Institute of Stockbrokers. And so it's only fitting that at the end of this, we're going to have a closing gong ceremony chaired by the president of the Chartered Institute of Stockbrokers, with us, Mr. Oluwole Adeosun. And before the start of this, I just want to give a bit of background as to what happened today. The stockbrokers all went on a march on Custom Street to mark and commemorate this. They went in the numbers to be able to to tell people that they're back in the market, they're back for business, and they're just trying to get investors, boosting investors' confidence in them. I think it's kind of like a boosting investors' confidence, because the market has been trading a little bit low and cautiously for some time now. But we're hoping that with the physical trading back in gear, full gear, hopefully that the market is going to resume, and then maybe caution will be thrown into the wind a little bit, and then we'll see some risk on buy sentiment in the market instead of the risk of buy sentiment that we've been seeing, Ladi.
Quite interesting, and hopefully this might be that catalyst that we've been waiting for to start another uptrend, in the market. But what else is going on there?
So as we speak right now, the stockbrokers, as I mentioned, are waiting for the closing gong ceremony. As we speak, there's probably a meeting going on with the chairman of the president of this Chartered Institute of Stockbrokers, having a meeting right now. But he's going to be here shortly for the closing gong ceremony. But I have in the studio with me to talk about what's going on in the market and what's going on in the stock exchange. Mr. Kofi Garba is a stockbroker here. He's one of the veterans in the stock exchange, and he's going to tell us what we're going to see going forward and what we should expect from the market, especially now that we've got new technology coming on. If we're going to see more of the remote trading or more of a hybrid situation going on at the NGX now. It's good to have you, Mr. Kofi Garba.
I'm happy to be with you.
So what does it feel like being at the NGX?
Well, generally we are highly
back,
respected.
fiscal trading.
Yes, not only that, when it gives us this natural touch. Because it's not only trading, it's just like rubbing mind with each other and also discussing the affairs of the market and the companies. So it is highly appreciated by the stockbrokers, and I believe this will be reflected even in our turnover in the transaction, and also most of the gainers and losers will be much better than what was experienced before. Everybody is on his own. Today, we can share knowledge and we can share the market, and you can see the sentiment working together with us.
Can you share some of the challenges you encountered? You had working remotely, trading remotely from your various locations.
That, you see, any time you are trading remotely, you are just subject to the availability of the services. And most of the time, the service cut abruptly, and you cannot even get further information. When we rub together, we get what we discussed in the market. And you will see that some of the information help us to either buy or sell based on the available information that discussed among ourselves. So trading lively, it brings the flavor of the market, and most of the brokers prepare it the remote trading, because remote trading, you are just on your own and you are not certain times you want to do this transaction, and you find that either your particular line or the services providers are not up and doing.
So what would you say, what should we expect? Should we expect more hybrid? What would you prefer? Do you want the remote trading to go on, or do you want more back to the the trading floor?
Not all the brokers that have the ability to do the remote, and even those who are having the ability to do the remote, they prepare to come to the floor. Because when you are on the floor, you are directly doing, and you be rest assured there is no break up by any chance. So therefore, the brokers prepare to come to the floor. Yes, we know that the high net institutional investors, they prepare to trade remotely. That will go concurrently with most of the brokers trading on the floor. But the beauty of the trading on the floor, to give you to get more information, and you will be more excited when you see the trading, because even when you are not aware, a broker will shout, and that will raise your attention to those transactions that is going on, and that bring the flavor of the market.
So you talked about an information gap right now. You kept mentioning the information gap.
Yes.
Why do you think there is? Are there not readily available information on the NGX website for your transactions?
The informations are there, but even when you have those information, there is facts behind the figures. And most of these facts behind the figures, you may not get it from the figures. The figures, they are there in the information, but you need to get the facts. When you are on the trading floor, you get it free of charge. Because somebody will tell you, this is what I have learned that is going on this, or this is what is about to happen to this company. And this trigger change and trend. And you will see that brokers are taking position or getting out of the position based on those available information. And it really helps the brokers for doing their trading.
Do you think that, how has this helped with investors' confidence in the market, especially relationship with investors? Do you think working remotely, has it heightened, has it boosted investors' confidence in the NGX, or has it diminished investors' confidence?
You see, with the current position where we are, even investors trade on their own remotely. But the truth of the matter, both the investors and the brokers that are trading remotely, they face the challenge of services. And this is something that you cannot do away. This is Nigeria. You get break of the service and there is nothing you can do. But when you are on the floor, that one is taken away. And therefore you are sure and guarantee of your transaction going smoothly. And because of this, you see that most of the institutional investors and the high network stockbroking firms, when they have big deal, they come to the floor because it's better and easier for them to do the transaction hitch-free.
So do you think investors, the traders, have remained professional working remotely? Have they been able to maintain the standard of professionalism that is akin with the Institute of Stockbrokers?
We did to the best of our ability to interpret the available facts. But we do better if we get more information. And when you come to the trading floor, you cannot take away from that. Many information that you may not read it on the paper, you may not interpret it from the figure, you get it from the trading floor. And that is why we want to be on the trading floor, because those information decide what to do and the direction of the market.
So can you tell us more about this? Today is also marking the 30th anniversary of the Chartered Institute of Stockbrokers. How do you feel about this? Over 3 decades now in the line for the Chartered Institute of Stockbrokers. They used to be the Nigerian Institute of Stockbrokers. Now they became Chartered Institute of Stockbrokers. How do you feel about this, marking the celebration here for the closing gong ceremony?
We are really proud of it because if you remember today, the exchange is over 60 years. But we are talking of the institute that organized professional and produce professional and now separate us from the jobbers and separate us from those who claim to be professional that are not professional. So for the institute to be 30 years, we are highly delighted and we are proud of it, and we hope and pray that this will continue far and better. And we hope that if by the time the National Assembly approve our CC, that will be for the better for all of us.
Thank you so much, Mr. Garba Kofi, a stockbroker and is also the CEO of APT Securities Limited. So, Ladi, that's what we have for going on here. Still on the stockbrokers are here, still in full motion, ready to take on what the market will bring. But we are hoping that the market has a positive close because the week ended on a positive note, 0.81%, if you remember that. And we're hoping that it kicks off today on a positive note because of the commemoration. I'm looking forward to this, Ladi.
Right. Well, I guess it's a different ball game, trading, remotely and, having that energy on that trading floor. I guess they prefer, the energy. Anyway, thank you so much, Will. I'll see you later when you get back.
Thank you, Ladi.
All right, that was Will Ibong right there live on the NGX trading floor for the first in-person trading right there. And at this juncture, that's where we end the show today. Thank you so much for watching. Don't forget, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can see all our videos right there. Thank you for watching. I'm Ladi Williams. Bye-bye.